Bitcoin continues to go nowhere. After the initial break here, we had the volatility, which popped it back up, dropped it back up here, and then back here, came down. But really, over the last 7 days, Bitcoin has done nothing. It goes up one day or down one day, up the next, and then today it is down. The levels are the levels. I wish there was more exciting things to talk about here, but technical analysis can sometimes be amazing, and sometimes it can just be flat out boring. Right now, support is 73, 72 to 74 is the level I've been giving, and then resistance is 92. Until we break and confirm above or below one of these levels, this is range-bound trading on Bitcoin, nothing more.
Bitcoin Zella stands out with its simplicity and clarity. We've crafted an experience that anyone can dive into, whether you're a crypto expert or just a new to the crypto world. Now guess who keeps his eye on us? The author of best-selling book Rich Dad Poor Dad, Robert Kiyosaki. And we want to take this opportunity and thank all the people who trusted us, and we read every comment. And the best part, it's free. Subscribing now means you will get all new information for free. Don't just follow the trends, stay ahead of them. Subscribe to Bitcoin Zella today and enjoy the new edge. Gareth Soloway shares expert crypto insights and discusses blockchain evolution, market dynamics, and innovative trends. In this video, we cover his outlook. Let's watch to explore these ideas.
So number one, we haven't gone over the 10-year yield in a few days. Taking a look, the 10-year yield remains basically chopping sideways. And I think part of this is waiting to see what happens with the Federal Reserve and their guidance in tomorrow's meeting. The only thing that's catching my eye is the potential for a head and shoulders to be forming, right? And if we look at this, we can see there's a shoulder. That's your left shoulder, a head, and then could this be a shoulder forming on this side? And again, we don't know yet because it has to curl over and come back down in the next week or two. But if it forms that, the reason why that's important is because we can then go on to calculate the target of the downside fall in rates. And remember, head and shoulder patterns are bearish. Now, how do we calculate that target rate? If you've been following along for months at this point, I'm sure you guys already know. But essentially what you do is you take the high of the head, you drop a plumb line straight down right to the neckline. So this is called the neckline, the connector from essentially armpit to armpit or shoulder to shoulder. And you take that distance, pull it down, and wherever you break, okay, now this is a flat line, so it's not going to change the target, but wherever you break, that now becomes the measured move to the downside of the target, or where you'd expect it to go. And what we can see here is essentially that brings us down to about 3.5% as a downside move. Now, again, a lot of us would say, oh, that's great. The yields would be going down. Mortgage rates would be going down. Those are all true. But the kicker is this, right? The kicker essentially tells us that what this means is that if rates are going to go that low, things in the U.S. economy are not good, and you're likely seeing a spike higher on unemployment and, again, a very big slowdown in the economy if we're seeing things go that low. All right, so, again, that's, it's a double-edged sword. Yeah, mortgage rates go down and lots of, interest rates go down, but at the same time, it can tell us that the economy is not doing too well.
A massive Bitcoin whale has turned heads in the cryptocurrency market by increasing their short position on the hyperliquid platform to an eye-popping $515 million. The move, which marks the largest Bitcoin short ever recorded, follows a daring play where the trader opened a $332 million short with 40x leverage. Despite a multi-million-dollar loss earlier in the week, the trader has now bounced back with an impressive unrealized profit of $6.43 million. Bitcoin's price has dipped below $83,000 amid liquidations, amounting to $184 million over the last 24 hours, with short positions taking a significant hit. The market now waits anxiously for the Federal Reserve's upcoming rate decision, which could spark further volatility. Experts warn that low trading volume may be a sign of caution, suggesting that further declines or unpredictable shifts could be on the horizon. This dramatic maneuver highlights the high stakes in today's volatile crypto landscape.
The U.S. dollar, by the way, had a head and shoulders pattern right here. You can see it broke, kind of did a retrace, and then collapsed right into target. It's now holding this technical support right here. Now, the kicker is this, is that as we hold but don't really bounce, it's weakening this trend line. And again, in fact, let me go over to the big board and kind of dissect this on an educational basis. So when you hit a trend line, the optimal scenario for traders is to get a big bounce, right? You hit a line and you see a big bounce up. The negative when you don't see that big bounce is that essentially it's what we call here like the bouncy ball syndrome, right? Where a ball dropped from a high level down, we'll see a reflex bounce. But the problem is the bounce is smaller, and then you hit and you hit and you hit and you hit until you roll off a cliff. And that's the problem here, is that you're seeing a very minimal bounce in the US dollar, and it's kind of just chopping on this line, which what do we know that's creating? What type of formation in technical analysis is it creating? You have a down move, sideways consolidation. That's called a bear flag, right? So again, this is leading me to think that if this continues sideways for another 3 days, a week, 2 weeks, whatever it may be, it's basically prepping for another breakdown in the U.S. dollar. And listen, Trump has said that he wants a weaker U.S. dollar against other currencies. Generally, that helps in trade. It can help the economy. Although, again, it's not necessarily good for us because a weaker dollar means our buying power goes down overall. So it's kind of a double-edged sword again, just like rates going down are a double-edged sword. All right. So let's move on to Tesla here. Now, we got to talk about Tesla because Tesla's coming down this morning in the pre-market. You can see it's now trading around 228. So this did get a nice bounce off this technical zone right here, but now it's starting to collapse, and this will be in a trade that we're probably looking to day trade today. The big level is going to be this next gap fill here at around this 213 level. So there's a gap fill right here. You can see right in here, we never touched it. We never filled the gap. We pierced the top line, but we never touched the bottom line, which is gap fill. So at least on a day trading basis, that's going to be a big level. The question is, if it continues lower, how low could this go? And in essence, I was doing some analysis on this, and you got to start looking back at your March 2020 lows and finding trend lines. And so what we do is we connect that low from March of 2020, which is the COVID low, to the bear market low of 2023, and then right through here to about the 165 level. Look at how it connects perfectly, and I love showing this stuff because it shows how trend lines, it's not arbitrary, right? They actually find levels that all match up. And what this tells us is that if by chance, and I don't know, remember, I don't know the future exactly, I just know the levels where the probability increases for a bounce, but if Tesla were to keep collapsing, this now becomes a massive level that I would be watching as a swing trader for a potential great bounce, maybe a bounce of 25, 30% even off of that level. And again, it's right around 165 or so. Now, listen, it'll have bounces along the way all the way down there. It's not going to go straight there, or very unlikely that it goes straight there.
CryptoQuant CEO Kai-Young Ju has recently shifted his outlook on Bitcoin's future. In a March 17 post on X, he declared that the Bitcoin bull cycle is over, forecasting 6 to 12 months of bearish or sideways price action. According to Ju, all current on-chain metrics point toward a bear market, with fresh liquidity drying up and new whales selling Bitcoin at lower prices. He believes the market is entering a challenging phase. This sentiment marks a significant departure from his earlier stance on March 4, when he maintained that the bull cycle was still intact, albeit progressing slowly due to neutral key indicators and robust fundamentals, such as increasing mining capacity. Not everyone in the market agrees with Ju's bearish outlook. Swatch's lead analyst Pav Hundal insists there is no reason to panic. Hundal explains that while investors remain nervous over U.S. President Donald Trump's tariffs, the broader economic data paints a positive picture. He believes that once confidence returns, money will flow back into risk assets like Bitcoin. Bitcoin is currently trading around $83,000, reflecting a decline of nearly 15% over the past month. Amid this downturn, some analysts see potential for a turnaround. Crypto analyst Seth has noted that with the global money supply reaching new all-time highs, Bitcoin might be poised for a significant rally. Similarly, CoinRoute CEO Dave Weisberger predicts that if historical trends continue, Bitcoin could achieve new all-time highs by late April. In contrast, former Phunware CEO Alan Natosky warns that Bitcoin's current price is far below its historical lower bound, suggesting it should be closer to $250,000. Adding to the mix, Swan Bitcoin CEO Corey Clipson recently expressed optimism, claiming there is more than a 50% chance that Bitcoin will reach new all-time highs before the end of June. These diverging opinions fuel ongoing debate and anticipation among market participants, making Bitcoin's future a topic of intense interest and excitement as traders and investors watch every market move. Investors remain divided, with some bracing for a prolonged bear market and others anticipating a swift recovery fueled by exceptionally favorable global trends. If you've been with us so far, a big thank you. Don't forget to subscribe for free to Bitcoin Zella for your daily news. The link is waiting below. That's all for today's crypto news. Stick around for more updates, insights, and analysis on cryptocurrencies. Share your thoughts in the comments, like this video, and subscribe for more exciting content.